Welcome back to the portfolio, everyone. Today we're going over the top 10 high-yielding stocks you can buy right now. All 10 of these stocks pay nice high dividend yields, so if you're looking for some nice cash flow into your portfolio, these may be the dividend stocks you want to pick up. I'm the Gen Z investor, and every single day I talk about different stocks you can buy, the overall stock market, and any big stock market news headlines, so please like and subscribe. I want to jump right into this list. We got 10 high-yielding stocks today we're going to go over, and the first one on our list is Verizon. So all the stocks on this list range from around 4 to 7% dividend yields, which is considered on the high side. So these companies pay nice consistent dividends each and every year, and all of them have a small streak or a large streak of raising that dividend year over year. So first one on our list is ticker symbol VZ. Verizon, currently trading at $55 a share. You can take a look here, and on the 5-year chart, they were up over 17%. They spot a beautiful 4.45% dividend yield. And with every single one of these stocks, we're going to take a quick look at their dividend summary. You can see current yield at 4.45%, a very safe, very sustainable, close to 52% payout ratio, subpar 5-year dividend growth at 2.5% annually, with a 13-year dividend growth history. And with regard to how safe this dividend is, it has actually ranked at an 87, so a very safe dividend. The dividend seemed to be very safe, which means each and every year moving forward, Verizon is going to continue to pay out that nice 4% yield to dividend investors moving forward. The second stock on our high dividend list is PPL Corporation, currently trading at just over $25 a share. Very flat stock price, barely any price movement. Over the past 10 years, the stock is barely even up 1%. So 10 years ago, the stock was trading at around $24.30, and still today, it has, of course, not breached pre-pandemic levels, still on the decline and currently trading at $25 a share. This stock right here spots a huge 6.41% dividend yield with a 68% payout ratio. For me personally, I keep my dividend payout ratios below 75%, so this does meet that threshold with a 3.6% average dividend growth rate over the past 5 years and a beautiful 20-year dividend growth history, so they are making their way towards becoming a dividend aristocrat. The dividend safety on PPL Corporation is around a 75, so this dividend is considered safe, very unlikely that it is going to be cut anytime soon. The third high-yielding stock on our list today is TD Bank, Toronto Dominion Bank, currently trading at $44 a share. Of course, we know the financial sector has been hammered as of late, and they have not recovered to pre-pandemic levels. Pre-pandemic, trading around $56 a share. You can see here all the way down to around $33, $34 a share, and it's still trading around that $44 a share range. TD Bank offers a beautiful 5% dividend yield right now with a very safe 62% payout ratio. A lot of room for that dividend to be grown moving forward, and a close to 8% 5-year dividend growth rate, which is beautiful to see, and a 4-year dividend growth history. With regard to dividend safety, they have a safe dividend with a score of 80, so of course another stock that I do not believe the dividend is going to be cut anytime soon. I believe that dividend cash flow is going to grow each and every year over the long term for investors. The fourth stock on our list today is, of course, Chevron, currently trading at $86 a share. 10-year price chart, you can see it is up 31% and of course has not recovered to pre-pandemic levels. Pre-pandemic levels trading around $120 to $125 a share, currently down at $86. With regard to their dividend, they pay a juicy 5.83% dividend, extremely high payout ratio on Chevron, and very small 5-year dividend growth rate around 2.5%, and they've been growing that dividend for the past 4 years. With regard to dividend safety, they are ranked at a 65, so somewhat on the lower scale, but it is still considered safe at the current moment. The next stock on our list, we're going to jump right into AT&T, of course, a beloved stock from many dividend investors. The current share price is just over $30 a share. 10-year chart only up around 25%, so of course, again, not a lot of price fluctuations with AT&T. Over the past 8 years, you can see it's kind of a flat price chart overall, and of course, nowhere near pre-pandemic levels at around $38, $39 a share, still down around the $30 a share range. With this $30 a share price, you can see here their dividend yield is close to 7% at current yield of 6.82%, 65% dividend payout ratio. Of course, AT&T does have a lot of debt they are paying down, but they still have enough room to grow that dividend each and every year. Their 5-year dividend growth rate is around 2%, with a beautiful 35-year dividend growth history, showing this is a dividend aristocrat and is actually working towards becoming a dividend king if they can go for another 15 years of increases. And of course, that is a 50-year dividend growth streak, which would make them a dividend king moving forward. With regard to safety, once again, similar to Chevron, ranked at 65, so it is considered safe, but is not very safe. They're probably not going to get cut that dividend anytime soon, but of course, if they don't improve fundamentals, it may be cut in the long run. The next stock on our list is ticker symbol DUK, Duke Energy Corporation. Currently at $80.82 a share. 5-year price chart is only up 10%. Another stock that is relatively flat over the long term. If we take a look with regard to their dividend, you can see they pay a beautiful 4.84% dividend with a 75% payout ratio. So they are right at my personal threshold, but enough room for a utility company to, increase dividend year over year as revenues increase. With a solid 3.52% dividend growth rate. Nothing too exciting here, but of course your money is growing at least at the rate of inflation each and every year with a 9-year dividend growth streak. How safe is this dividend? Considered safe. Dividend safety score of 80, so very close. 81 and up is very safe, so they are right at that cusp of being a very safe dividend, which is good to see. Next stock is a pharmaceutical company, Pfizer, ticker symbol PFE, currently around $34 a share. And once again, another flat chart. With all of these high dividend yielding stocks, the high dividend income is where most of your returns are going to come in. You're not going to see a lot of price fluctuations, especially the ones on this list today. You see here on the 5-year price chart is only up around 3%. Of course, still not recovered to pre-pandemic levels where it was trading over $40 a share. Currently at $34 a share. Let's take a look at the dividend. So their current dividend yield is around 4.4%. Very safe 55% payout ratio. Decent 5-year dividend growth rate of close to 7% at current 6.7% annually over the past 5 years, with a 10-year dividend growth streak. Very nice to see from Pfizer. With regard to safety score of 75, so it is considered safe. Probably not a lot of risk that it gets cut anytime soon, which is good to see. Next high dividend yield stock on our list is Pembina Pipeline Corporation, ticker symbol PBA, currently trading at $23.86 a share. You can take a look here on the 5-year chart. The stock is down 23.5%. But if you look at the 5-year chart, you can see the stock price is extremely flat over the past 5 years. Then we saw pre-pandemic level at around $39, $40 a share. We saw the overall crash, dropping the share huge. And of course, it made a slight recovery, but is nowhere near fully recovered to pre-pandemic levels. With regard to their nice juicy dividend, it is around 7.55% yield. Extremely high payout ratio right now for Pembina, with a 2.85% dividend growth rate over the past 5 years, with a 4% dividend growth rate streak. With regard to safety, PBA actually has a safe dividend from Simply Safe Dividends at a score of 80, so once again, very unlikely that that dividend gets cut anytime soon. The next stock is Bank of Nova Scotia, ticker symbol BNS. This is one of the Canadian Big 5 banks, currently trading at $40 a share. 5-year price chart, you can see it is down 18%, but most of that is because of the pandemic, where pre-pandemic levels are trading around $55 a share. Strong dip, slight recovery, but still nowhere near pre-pandemic levels. On the 52-week chart, you can see it is trading on the low end. They have a nice 6.44% dividend right now, with a 68% payout ratio, leaving them enough room to continue to grow the dividend. Meanwhile, continue to reinvest back in the business. This 5-year dividend growth rate is actually incorrect. Bank of Nova Scotia pays their dividend in Canadian dollars, so because of the currency conversions, it shows a decrease in dividend over the past 5 years. But Scotiabank has actually continued to raise their dividend over the past 5 years, and the dividend growth streak is actually around 9 years right now. But because of the Canadian dollar currency fluctuations, this shows negative, but it has grown its dividend over the past close to 9 years. With regard to safety, it's currently ranked at a 70, showing that it is considered safe and not probably going to get cut over the next short term. The last and final stock on our list today is ticker symbol UVV, Universal Corporation, around $42 a share. Once again, 10-year price chart is only up 7% over the past 10 years, so a very flat stock overall. With regard to that dividend, they are paying a current 7.32% dividend, which is extremely high. But with that high dividend, they do have a high payout ratio, but they have considerably grown their dividend over 8% over the past 5 years. And why I like this company and why I believe their dividend is going to be stable moving forward, even with the high payout ratio, is because they're at a 48-year dividend growth streak. So I really do believe over the next 2 years, they're going to continue to pay that dividend and actually increase it over the next 2 years to become a dividend king at that 50-year mark. And with regard to safety, it is still considered safe with a score of 75, so very unlikely that that dividend gets cut anytime soon. So that was the final stock on our list today. So I just went through 10 high yield dividend paying stocks that may be nice in your portfolio. Of course, do your own research, look into these companies, determine if they're fit for your portfolio, and if they are, buy them, and of course collect some nice dividend yields. But of course, always do your own research, make your own financial decisions. And I'm the Gen Z investor, and every single day I come up with new videos that talk about the stock market, overall stock market performance, and of course any big news in the market. So thank you for tuning in, and I will see you in tomorrow's video.